Well, hello, traders and investors. I'm L.A. Little, and this is your daily NeoTA Wrap, where we take a look at these markets, and we're doing it from a neoclassical perspective. Supply and demand on the charts, visual, folks. Technical analysis, neoclassically. I do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. Archived on YouTube. It's under the channel L.A. Little. And if you haven't subscribed and you want to, just reach up in the right-hand corner and do so. Anytime I push public content, you'll get a notification. As far as what happened today, well, let's take a look at the numbers here, and then we'll go to the charts. Nikkei coming down here tonight. As far as last night, it was down as well. Actually, it was slightly mixed overseas. It was up. But elsewhere, pretty much a down day other than here, right? Index pushes higher. The NASDAQ pushes higher. And we actually had the Russell, where's the Russell? Russell down slightly, and the S&P down slightly. So we go up, and we get Goldman ringing the bell tonight and saying, hey, you better take profits. Seems like everybody wants to ring a bell. Talk about a wall of worry. This thing is about as deep as it gets. I pop into a lot of sites and just kind of look around when I have some time, and I did have a little time yesterday. I looked at quite a few sites, actually, and I can't believe how negative people are. And folks, we're at the highs. That's what you call a wall of worry, and I suspect this market is going to continue to grind and just grind up all these naysayers until they give up, and then it probably comes in. Gold, silver, slightly higher today. Oil gets whacked, down 5%. That was the big heavyweight in the S&P that pulled it negative today. Bonds also got whacked. Down 1.26%. The kinds of moves we get anymore in these indexes, whether we're talking about bonds or precious metals, precious metals have always been a little bit volatile, but like bonds, for example, or currencies, when you're getting 2-3% moves in a day, I mean, it used to be unheard of anymore. It's normal. But that's a thought for another day. Let's turn our attention to what the charts look like. I haven't had a chance to review them, so we'll review them together. So what do we got here? We got 4, 5, 10, almost 14 days now of sideways movement in a very tight range. We're talking about 15 points basically, just straight across. Folks, this thing is getting ready to make a move up or down, right? You're only going to go so long. And as I was pointing out, I believe in the weekly show last night, is that you're getting to the point now where the angle of ascent, right, rather than being this huge angle of ascent, right, 90 degrees just straight up, right? And here you're maybe doing like 65 or something, right? 45-degree angle is something that's sustainable, right? That can be sustained. That's out here somewhere. This move still, it's getting to the point where it's getting closer and closer to this idea versus how crazy it was. And the farther it gets out here, the closer it's going to get to it. Like if we pull it out to here, say another week, you're getting pretty close to where you can actually have consolidated, worked off the overbought in a sideways manner without giving anything back. That's the way this thing is trying to do it. Whether it's able to do that with without any kind of a push down, usually what you'll see, even in a case like this, is when you have this tight consolidation, after a big move, right, you'll see some sort of a spike down that just immediately gets bought. And then that's what takes the breakout to the top side. So I wouldn't be surprised to see that happen here before too much longer. That's the S&P 500, looking pretty sharp still, nothing wrong there. Still hasn't met its ABCD target, whereas everything else has. If we move over to the NASDAQ, what we see here is even more of a stretch. And let's look at the angle of ascent on this one, right? So we had the steep angle here, and it really hasn't got that much better, all right? A little bit better, but not that much. But look at what it's done. It's just climbing and crawling higher, right? Without any kind of retrace, right? Just grinding higher here. Just chewing up anybody that's trying to short this thing. It's almost like, when you boil a crawdad or a bunch of crawdads in a pot, you start it out nice and slow, and then you just kind of turn the heat up, right? And that's what they're doing here. They're just taking anybody, every day, anybody that's short this market's coming in and saying, tomorrow's the day, right? Tomorrow's the day it's going to break. Folks, there's nothing here to suggest this thing's going to break. Get a new high and you grind higher. Until you get some sort of reversal, and we haven't seen it yet, you just got to expect this thing to go higher and higher. If we look at the NDX, you got the exact same picture, closes at a new high, and this thing, I believe now, is actually over the highs. Let's look at it over here. Let's pull up the top here, 4737. Today it's going to close 40. Yeah, it's over the highs. Brand new all-time highs on the NDX. And finally, if we look at the Russell, on the Russell, what we have there is a bit of a hybrid in between the S&P and the NASDAQ. In other words, you get the nice big fast move up, right? And then you kind of get that sideways consolidation, and then it starts grinding higher as well. Let's look overseas. And overseas, we'll start with Australia. We've got the RBA meeting tomorrow. We'll see if they're going to ease rates. This thing, does this look familiar? Another one, just climbing and climbing and climbing. Today it touches up to 56.91. If you bring over the long-term chart for my friends down in Australia, you know, what you're doing is you're coming in this big bar, and I suspect you just about hit your top. You're probably going to pop that tomorrow, 57.10, and then pull back. That's your breakdown bar off the highs, and that's where it's coming to, and it wants to test it now that it's there. And so I think whatever the deal is tomorrow with the central bank, you're probably going to see these guys, hit that number and then pull back. Or I should say that would be the ideal scenario, right? Get some sort of a pullback once you've met your target. If we move over to Europe, Switzerland didn't trade today, so we'll start with the DAX. Now the DAX, how many times can you fail? You go up here, and this is a swing point high, right? So the first thing is you got a swing point high that you're trying to get over right here at this price point. And as we get to that price point, right, it trades over it 3 different times, actually 4 different times, and it hasn't been able to hold it, right? You trade to it, you trade over it, you trade right to it again, you trade over it again. Every one of them you fell on, you come back. Every one of them is failing on volume as well. I don't get the volumes until later, but I suspect today was a light day as well. This thing is ready to try and turn. And if we look at the CACs, where we had some bad PMI numbers this morning, the CACs has a bearish engulfing. And so, if we're going to get a pullback, at least in Europe, this looks like the best chance for it. You had the 2 majors. You had Switzerland off today, and Switzerland actually traded down harder on Friday than these 2 did. And so you've got, the setup tomorrow to come in here and fill this gap and actually head back down and go test like a swing point low or something significant to the downside. And so this is the way this is set up. And if you look at it right, if you're gonna get the push, you'll get a decent push because you're gonna break under this low if you do it. And so you're back into this group of stocks. You get a press back down into this area and potentially back down to test that swing point low. So I think if we look at Europe, Europe is finally giving us a decent chance at some sort of a retrace, which by proxy could give us the retrace here in the States. So that's the overseas markets, and that probably is the best setup that we have had in some time, and that we're actually seeing Europe trying to trade lower. Now, the last thing we should actually look at is London when we're looking at the overseas market, because that was the epicenter of all the issues that took place. And of course, London shot up like a rocket after the big push down on Brexit here, right? Shot up like a rocket when everybody realized that central bank is going to do some damage to anybody that stands up against it. It has a huge ABCD structure. It hasn't completed at all. Doing the sideways consolidation. I don't know what they're going to do Thursday. Thursday's going to be the deal with those guys, and we'll see if they get the spike up afterwards. So, it might be a point where you get a pause in Europe as we get closer to the decision point here on the London exchange and the central bank there. Now, before we turn to where our market is probably going to trade tomorrow, I'm going to turn my attention first to 2 or 3 names viewers request, and so we'll take those first. The first one is research in motion. Now, research in motion, if we look at the charts here, and the questions here have to do with daily to intermediate term time frame. If we look at them, nice big push up, gets over swing point high, all these breaks on the upside, volume coming in, all that looks great, right? If we go to the weekly and look at it on a weekly time frame, you also broke here. Usually when you break on multiple time frames, is what this one did, is you can expect that you're going to get 2 to 3 bars. So your breakout is here, right? So you can expect 2 to 3 bars of extension. That's the best case. And that's not the best case, but that's the likely case. And those 2 to 3 bars can be, something sideways to up or just straight up or whatever, but it usually does not break back down after that sort of a move. And so with a strong market behind it, that's what you should expect. And so I would think that this comes into play. You're already over this critical area here last week. So it looks to me like this is shooting for this swing point high around, what is that, 836. And if you get over that, you're going to try to get to the breakdown bar's top, which is 922. That's probably the best case scenario. So I like the way this is trading. Could it be better? Sure. And there can always be better, but yeah, it's trading positive. And if you look at it on a monthly chart, it's trying to get up to that area as well. It's right there. And so, if you're looking at long term, right, this is just a range trade. But you can trade things like this, right? Go back and do your range. You can trade things like this and make good money on them when you've got a range that expands from, $5 or $6 roughly up to about $10, $11. I mean, that's a 100% move when you get that kind of a move. So definitely tradable, definitely a stock that one could work for a nice trade. And so if you're looking at that and want to trade it, it's not a bad trade to the upside. Expect some more extension there. Next one up is Kroger. Kroger, of course, food store. Kroger comes down, hits this low. I'm on a daily chart here. Hits this low with volume. And even though it got a little bounce, I suspect it's going to hit it again. Let's pull over the weekly and see what that looks like. And if we look at it on the weekly, it's also hitting a swing point low as well. And you got this big spike bar over here. So, I don't like the way this chart looks. I don't know if you're thinking about it long term, not long term, but I don't know if you're thinking about it as a long or a short. But this is not the type of trade I would make. If you get under this area, which it looks like it's going to try again, right? There's nothing to support it until you come back down to these lows. So not a name I would probably be messing with at this particular point in time. Now, I know that they've had a huge run. If we look at it on the monthly, you can see it. They've had this tremendous run, so some sort of a consolidation makes a lot of sense. This makes sense if it comes back into this 27.5 area. So I'd be very patient here and studious and give it a chance to do something to the downside before putting my money out on the line. Last one up for tonight is Juniper, which, like Kroger, has kind of been struggling as well. I've got the weekly up. Let's put the daily first. You see the big push down. I suspect this was off of earnings. It's coming into an area here where you should expect an attempt to support it, right? This area right in here. And that's what it's trying to do. You got the under over, a little reversal, hammer reversal. But when I see a hammer reversal, what I want to do is I want to look at the prior bar, right? And the volume on that bar versus all the way back over to the big bar. So even though it got the hammer reversal, I would have preferred it on this bar, not the next one. So not totally great, not terribly bad. I do think this can bounce. Where can it bounce to is the next question. I think this area, this overlap of these two significant bars would be the best you could expect, which is about halfway back up this breakdown bar. So if you're trying to trade it long, that's as much as you can expect. I don't think that's worth trying to trade. If anything, I'd be looking to short that trade on the bounce versus buying it. And so that's the stocks from viewer request tonight. I'll pick up some more tomorrow night. Let's go back to the ending numbers here and where we think things are going to go. When we look at our markets, if you look inside of them, the only sector that really is getting damaged right now is the XLE. The oil sector in general, the pipelines, not so much the pipelines, but the oil and gas drillers, even the large cap, which is the XLE, all of them based on oil, WTI getting hit as hard as it is doing. Volume comes into these, you had a big reversal on Friday, saved that swing point low, but you break it tonight and you break it with volume. This is going to try to fill now the bottom of the range here on a weekly basis. This is the weak sector, but everything else continues to look good. And so with Europe potentially going to pull back, with us going sideways pretty much on everything other than technology of late, we could get that little small pullback I've been talking about, setting up tomorrow, maybe Tuesday and Wednesday in front of the next central banker after Australia tomorrow. And then that may be the chance for anybody to put a little bit of money to work if it does it. But right now, you don't have any failures. You don't have any real weakness in our markets. All I can see is Europe probably trying to trade down tomorrow, may by proxy bring us down a notch finally, independent of the strength that we continue to see here. That's it for tonight. Have a great one. Thanks for joining me. Take care, and I'll see you next time. Good night.